PBOC to the rescue. The People's Bank of China helped risk sentiment return to the region on Thursday by injecting the most liquidity to the financial system since January in a bid to alleviate soaring yields on 10-year sovereign debt. Because of regulators' crackdown on wealth management products, Chinese banks haven't been able to temper the damage in the nation's debt market themselves. Beijing is walking a fine line in trying to reduce excess supply without risking a meaningful slowdown in growth. Policymakers are continuing to search for ways to curb aluminum production in particular, which has prompted the nation's top producer to consider whether to move plants to Indonesia. Oilxit, Norway's $1 trillion sovereign wealth fund, which invests the proceeds of the nation's natural resource revenues, is planning to divest its petroleum stocks. Such a move would spread the risks for the state's wealth, said Norges Bank Deputy Governor Egil Matsen. Shares in some of Europe's energy giants, such as Eni Spa and Royal Dutch Shell plc, traded lower on the news. Analysts generally lauded the proposed move's diversification benefits, while warning it wasn't necessarily sending a clear signal on the near-term outlook for oil and gas equities. Closer to tax cuts. House Republicans passed their tax overhaul plan on Thursday, with a bill that cuts the corporate rate and lowers taxes for most Americans, garnering the support of most of the party's representatives, though a dozen from relatively high-tax states voted against it. White House chief economist Kevin Hassett suggested that the U.S. economy could sustain a growth rate of around 3% if this plan becomes law. Double Line's Jeffrey Gundlach said he lost hope with the drain the swamp concept upon seeing the GOP tax bill, and was appalled that the carried interest loophole for hedge funds was retained. Municipalities and cities may be similarly let down, as they'll be paying for some of the tax cuts. According to the Joint Committee on Taxation, the Senate's revised tax plan would ultimately result in a tax increase on lower-income Americans by 2021, and those making less than $75,000 a year would see their tax burden rise in 2027.